The SEC releasing a statement earlier, in part saying that, quote, they will act to protect retail investors when the facts demonstrate abusive or manipulative trading activity that is prohibited by the federal securities laws. Let's discuss with Jacob Frankel, former SEC Division of Enforcement Senior Counsel and partner at the law firm Dixon Wright. Thanks for being with us this morning. Can that case be made, that statement we just read from the SEC, can that be made here?
Well, the answer to whether it can be made is really going to be driven by the evidence. And that is, you're talking about what role the brokerage firms were playing in this process in terms of limiting the ability of individuals to trade. I actually tend to believe that was proper. And the reason that was proper was because we're forgetting that brokerage firm customers sign customer agreements. And those customer agreements enable the firms to do what is necessary in terms of ensuring customer protection, but also what is in the best interest of the broader customer base at the firms. But more broadly, in terms of investor protection, we're also talking about what could come at the end of an enforcement investigation. And we really don't know what that actually means or will lead to. We know there will be an investigation. Will be an investigation on all sides. But the question is social media being used for discussion of issues, or is it being used for the purpose of propping up the price of stocks or depressing the price of stocks? The latter could well be stock manipulation. So I think there's a long way to go. My view with respect to the SEC is what it should have done several days ago is use its trading suspension authority. And it does not have to be for a 10-day period, as we see, as always the case with small cap stocks. It is, the statute says up to 10 days. I think the SEC had an ability and has an ability to create a more powerful pause as these companies blow through the circuit breakers. But that is the challenge of an agency that's still awaiting a permanent chairman, permanent enforcement director, permanent director of trading and markets.
Yeah, for sure. And the timing, given that fact, is certainly worth noting here. You just said a lot. There's a lot to unpack. I want to go back. I realize that if you're using a platform like Robinhood or one of the other platforms as well that made similar moves yesterday in terms of limiting certain types of trades in certain stocks, that is your prerogative as that company. And certainly you can debate what that meant in terms of a liquidity issue at a company like Robinhood and everything else. But I'm curious. I could understand accounts with options expiring today that you could freeze or limit, maybe have them be liquidated because of a concern of a capital requirement. Certainly, we've seen things like that happen in the past. The fact that there was this blanket freeze, at least it's my understanding, there was this blanket freeze that anybody that was buying options, including further out in the future, or even trying to buy the underlying stock of some of these names in general, couldn't do it. How unusual is that?
This is all very unusual, but we really are in uncharted territory. And the other component I think we have to put into the mix is margin calls. In other words, you have a lot of investors who are approaching the trading, including we're talking about uncovered calls, uncovered puts. I mean, we really don't know what all of those underlying dynamics are. There is an issue of solvency for these brokerage firms. If all of a sudden there are a lot of margin calls, which firms do need to make when people are not satisfying their margin requirements, and that could actually impair the financial well-being of these firms. These firms also have obligations to their, to all of their customers, not just the individual customers who are trading. And the only other thing I think that relates to all of this is, the focus is on long the effects on the customers. There's also a lot of discussion about, well, what about the short roll, and what about competing with the shorts? The fact is, I'm very much of the view that the shorts have a necessary role in the markets to ensure proper pricing. So there are a lot of factors that really come into play here, and it's a weighty decision that these firms were making.
Shepard Smith here. Thanks for watching CNBC on YouTube.